Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today we're going to be looking at the definition of long-term investments. As I do in each one of these fundamental analysis tutorial videos, I'll give you the actual definition, and then we'll go on to look at an example and give you a little more insight. A long-term investment is a non-current account on the asset side of a company's balance sheet, which represents investments a company intends to hold for more than a year. In many cases, they can never intend to actually sell it. Long-term investments may include stocks, bonds, real estate, etc. Now let's look at an example. Okay, to start off this example, we're going to be looking at Walmart Stores Incorporated balance sheet, and in this particular situation, looking at long-term investments, that's where you're going to be looking at the balance sheet to find that. And they will be the first line item in most cases beneath the total current assets. So current assets, of course, would be anything that the company was looking to liquidate within the next 12 months or the next year business cycle. And long-term investments, of course, would be items which are going to take longer than a year before a company would liquidate them. And like I said, in many cases, companies will be buying stock in other companies with no plans of ever selling the actual position. So that's something to keep in mind. Now, if a company decided that they had these long-term assets and they decided they were going to sell them, you would see them reduce the long-term the long-term investments line here, and you would see them increase on the short-term investments, basically saying, okay, we had long-term position here, and now we plan on selling those within the next 12 months, and so they would be listed here until they were sold and then turned into cash, which would then put it there, right? Okay, so that's how that would actually be played out. In many cases, you will find that companies will have long-term or short-term investments, and in other cases, you will find companies won't. And the difference, of course, is just a difference of what management thinks is best for their company. In this particular case, Walmart apparently believes that their money is better served, growing their actual footprint, their business model, so forth and so on. They don't want to invest in other companies. They want to invest in their own. That's fine. But there are other companies out there which will be heavily into investing both long-term and short-term. And one of them, which we all should know if you're investing in any way, shape, or form, would be, of course, the one managed by Warren Buffett, which would be Berkshire Hathaway. So let's go ahead and look at that balance sheet to get an idea of what we're talking about, long-term investments. Okay, here we are looking at Berkshire Hathaway, and you can see we're looking at the balance sheet and the assets on the balance sheet. Down past the current assets, we find long-term investments, and we find it's $125 billion worth of those. Whenever you see that number, whether you're looking at short-term investments or long-term investments, you have to know that they are recorded on the balance sheet at the cost of the company. Basically, whatever the company invested, that was the number that's going to be there, unless the stock that they purchased, we're talking about common stock for this example, unless the stock that they purchased is actually trading at a lower price. So they got to use the lower of whichever one. Either they have to use stock price if it's trading at basically at a loss to what the company actually paid for it, or the company's price. Now that means that basically over the long term, many of these positions that are shown on the long-term investments are going to be worth far more than they're actually reported here on the balance sheet. So that's an important element to note. If you actually go dig into the company's 10K or the annual report, you may find a list of what's actually under the long-term investments, and you'll be able to analyze and see, okay, well, wait a minute, well, they have this many shares of Coca-Cola. Those shares are actually really worth this price according to the market rally that we've had recently, or something like that. You can actually analyze and see that the company's worth more than their balance sheet would actually reflect in those particular cases. So that's an important little element, little place that you can find gold. Often, if you dig into the annual reports, you can find some value that's hidden if you're not actually paying attention. The last item to note regarding the long-term investments, of course, would be that these are not going to help you with or help the company with the day-to-day financial affairs. These are long-term investments. These are non-current assets, and these are not going to be, again, used or calculated in any kind of current ratio or quick ratio or anything like that. Anything the company needs to manage day-to-day expenses is going to be a current asset item here, and that again will not include long-term investments. And now you know. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice. nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.